Welcome to another S&P 500 analysis. This is the midweek edition. So the market been down for a couple of days now, and right now it seems to be spooking a lot of the market participants, especially for those that think the market only goes up. Well, apparently that's not the case. It also goes down sometime, right? So the question right now is, will the market continue to go down? So we're going to take a look at some of the price action and some of the internals and the sentiment to see where the market might be headed in the coming days. So stay tuned. Let's start looking at this intraday chart of the S&P 500 and some of the internals. So you can see I got the last couple of days of the S&P 500, and you can see that it is pretty much been fluctuating within this range here, right? Between the 43.8468 and 43.4674, and kind of fluctuating in there, building a little bit of a balance or consolidating. But also notice that the new high, new low, been kind of fluctuating between, the more new high or more new low. So it just could not make up its mind. The market is pretty much in flux right now, right? And also on the up-down volume, yesterday we have the entire session was negative with the down volume dominate. And today is a little different story here. I kind of mixed bag. In the morning we got more off volume, and in the midday kind of got a little bit more down volume. Then in the afternoon we have a little bit more up volume. So the market is trying to decide or trying to determine a direction to take. So right now, and today is OPEX Wednesday, so we are not surprised with a little bit of a adjustment into the close. So, and also looking at the VIX. The VIX is also is inside of that 2030 zone, and it is sitting somewhere around 2292. And the put call ratio is still, yesterday it was slightly above the 0.75. Today dipped below it again and sitting at 0.67. And the advanced decline yesterday, was horrendous. It was more than 2,100 more declining issues than advancing issues. And if we take a look at some of the early low point, it's like 2,201, right? 2,201 more declining issue than advancing issue. So that means almost like 90% of the market is down. And here today is slightly different. Today we actually have 524 more advancing issue than declining issue. Of course, today the S&P 500 closed up 6.83 or 0.18%. Okay, so we did get a positive, AD, but we got a little bit of a negative divergence between the down volume ratio and the S&P 500. We're actually seeing a negative divergence because the up-down volume ratio was in favor of the down volume. Looking at the daily chart here on the S&P 500, we notice that the price came up, right? The last few days after last week's sell-off on Monday, it works itself back up to this trend line here and formed a inside coil, right? Like a little bit of a pennant. Okay? So it's kind of coiling here, and one would basically look to see what it break above or break below, and it appeared that it broke below, right? It doesn't appear it actually did, because yesterday it broke down and came all the way down, and today formed a little bit of an inside day also, but this time it's at the the lower end of the candle, the lower region of the candle. So we'll be watching to see what it break below or work itself up and try to fill this gap here in the coming days. And the VIX, like I said, is inside of that 2030 zone. So today it closed at 2256, and the put call ratio ended at 0.6755. So there was still a little bit risk on, but with some fear and caution. And here, looking at the up-down volume ratio, just like earlier, we saw that negative divergence here. And also, on Monday, it actually was up. Yesterday and today, it is pretty much down. So right now, it's the AD line seems to the advanced decline seems to be holding up, not as strong as in the past, but it is positive. And I said yesterday it was horrendous, and it closed with 2,101 more declining issue than advancing issue in the New York Stock Exchange on yesterday's sell-off, that more than 2% drop. For the new high, new low, we're actually seeing a little bit more weakness coming in now on the in the New York Stock Exchange. Yesterday was we got two more new 52-week low and 52-week high, and today we have 6. And like I mentioned earlier, we're talking about the advanced decline. We are seeing a little bit of a positive, divergence here, because if you look at this pivot low here on this AD line, this cumulative AD line for the New York Stock Exchange, this low here is actually higher than this low. And if you look at the S&P 500 close, right, yesterday's close was 43.52.63, and this close here, right, is actually 43.54.19. So we actually got a lower close yesterday than this day here, but the advanced decline was actually higher. So we're actually getting a little bit of a positive divergence. And we was looking at this like subtle positive divergence already. We talked about that in last week's video, right? You see this AD line is lower here than here, right? While the S&P 500 is, here's a higher close than this close. So we saw a subtle positive divergence, and right now that positive divergence seems to be continuing. So keep an eye on that. We could see a little bit of a, bounce back, in the coming day. Not saying that we, this pullback is over, but it's certainly there's a little bit of strength or not as much weakness or continued weakness on the AD. Although it is kind of scary yesterday with the advanced decline, over 2,000 more declining issue than advancing issue. But we'll keep an eye on it to see how this positive divergence will play out in the coming days. And for the NASDAQ market, we saw the NASDAQ 100 down 17.4 points today. And we did see a negative up-down volume ratio also. So there were more down volume than up volume. And also the advanced decline is negative, 661 more declining issue than advancing issue. But look at yesterday. Yesterday there was 2,852 more declining issue than advancing issue in the NASDAQ market. That we saw that last week also on that big drop on last Monday, I believe, right, 9/20th. And that was 2,937 more declining issue than advancing issue. So definitely the NASDAQ market is getting weaker, right, in terms of the advanced decline. Although today is a little bit better, only 661 more declining issue than advancing issue. But again, the market the NASDAQ 100 only lost 17 points. And the NASDAQ new 52-week high, 52-week low is a little bit more negative than the New York Stock Exchange. We are seeing more 52-week low than 52-week high now. Like today is almost 3-1 in favor of the 52-week low. The 171 new 52-week low versus 59 new 52-week high. So the 52-week low outnumbered the high by 112. Now, although the advanced decline been horrendous in the last few days, especially in the NASDAQ market, but we are seeing a little bit of a positive divergence here. Well, it appears to be building some positive divergence. We need to see the AD line on the NASDAQ market. It need to pivot back up. Then we could say this low is actually higher than this low. Then we essentially will get a positive divergence between the NASDAQ 100 and the AD line. So keep an eye on that on the coming day. Now, looking at the S&P 500 daily chart here, we are looking at the rejection up here. Remember, we had a trend line here, and we're saying that come up and encounter resistance here. Then we're basically looking for this thing to come back in and possibly work itself down toward this level here, this 382, somewhere around 42.46, and also this pivot high here at 42.32. So as you can see, it's appear that it is trying to come down at least this 50% level here, somewhere 43.04. Today it printed an inside day. So keep an eye on it for tomorrow to see would it break that inside day and come down to this 43.04 level, or would it be a false break on the inside day breakout? Should come back up again, we'll be monitoring this trend line for potential resistance, and not until it could get back above this pivot high here, somewhere around this level 44.63 area. Okay, if it could get above that, then we'd be looking at the possibility of maybe doing another leg up and come up to test this high. And here on the NASDAQ 100, what essentially was originally I had a trend line up here, and that's why I have this move to come up to this trend line, then maybe get a rejection and push it back down, and possibly come back and test this 141 level. And as you can see, it got rejected much earlier, and I basically updated the trend line to be this trend line here using this pivot high now. So right now, it's essentially is coming down, took out that 141 extension, and I'm watching this 14,548 to see would it be able to hold support here, and that would be the 127 extension, and that could also be somewhat in confluence with this trend line here. So kind of keep an eye on that. But if it does reverse back up, then we'll be watching this trend line as the potential resistance, first level of potential resistance. If we break through that, then keep an eye on this 161 extension at 15,233. And for the Russell 2000, at one point on Monday, we thought it might could recapture this 2297 level, and could be working itself back up to the high here. But as you can see, yesterday it reversed, and today continue on the pullback. So right now we are keeping an eye on this 2195 to see would it hold this 2195, and if it doesn't, then we be looking at this 2134, essentially this balance area here, the lower level of this balance area. And if it break this balance area, then I'd be looking at 2075, then possibly 1935. But right now we'll be watching first 2195, 2297. Here on the Dow Jones Transportation, on Monday, we thought it might be able to come up to this trend line and possibly break it and work itself up to try to reclaim this 15,000. And as you can see, it didn't even get close. So right now it's back to testing this 14,242 for potential support and see would it be able to hold. And if it does, once again, we'd be continue to watch this trend line as the first level of potential resistance. But if it break this 14,242, look for this 13,656 area. Okay, that's basically this 382 Fibonacci retracement. And the Dow Jones Industrial was got close to breaking out of this consolidation of this balance area. Okay, and you see that the entire market reversed yesterday, so it just dragged everything down. Today it did have a little bit of a positive day, and it too also put in an inside day here. So we'll see what it continue to work itself back up, and if it could get above this 35,150, 35,150, or above this trend line, then we could look at this high to be back in play. But if it breaks below, and let's say tomorrow we see a breakdown of this candle low, and we basically have an inside day break, then we'd be watching this 33,800 level, the bottom of this balance area, and see would it be able to hold support there. And if it doesn't, then I'd be looking at this low get taken out and then possibly come down and test this 33,000 area. Now let's take a look at the 10-year yield. Look at the 10-year yield. It shot up above this 1.5. Yesterday, the high was 1.567% on the 10-year, and today it closed at 1.541. So it got about this 1.5 area that we're watching. Remember, we were basically watching this 1.4, break 1.4, then go up to 1.5. So right now, we'll continue to monitor this, and it might come up here, and that'd be a big trouble if we get up to this 1.765 here. But we'll see. Maybe we get a little bit of a pullback and come back down to this 1.4 level. So keep an eye on that, or this 1.45. And here we seeing the US dollar shot up, booked this zone here. Remember, we're watching this zone between 92 and 94. Right now it's coming up to this 94.5. Today it closed at the 94.415 here. So we'll see in the coming day, would it continue to move up or come back and back test this zone before it pushes up again, or basically work itself back down. Because if the dollar gets too strong, there could be some other problem that will create. But that 95.70 certainly could be in play right now if the dollar remain above this 94.08. And for the crude oil, one would think that the crude oil would be down substantially with a strong dollar. Well, to a certain degree, it is now. We're seeing such a strong surge on the US dollar that has more of a play on oil prices than the supply and demand. So we'll continue to watch. Maybe we will see a little bit of a pullback as the dollar continue to climb. But of course, with a strong dollar, that also implies there's going to be a weak precious metal market, and we can see that right now on the silver. Remember, for the silver, we've basically been watching this 22.72 level for potential support here to see would it get a bounce back, and then we be watching this trend line as the first level of resistance. And if we get to this trend line, then we're essentially looking for silver positive work back up to this 24.70. But as you can see, silver sold off, and it sold off pretty heavily today. And it dipped below this 22.75. And I wouldn't be surprised that it's going to work itself down to this 19.6 level here. And for the gold market, we see gold is also pulling back. Remember the last weekly video I put out, I was saying this pattern here, say this could form a inverted head and shoulder on the gold. I said could, not saying that it is. All right, so, but right now, as you can see, this pivot low here went below, the 382 retracement of this swing here, the length of the head to the neckline. So usually the way that I see it, when the head and shoulder, inverted head and shoulder type of pattern get invalidated, is when the pullback to form the shoulder is exceed the retracement zone of the Fibonacci retracement of the swing from the head toward the neckline, and that could also invalidate it. Because there's, definitely when the shoulder here, this low here, exceed getting lower than the head, then definitely that would invalidate the head and shoulder type of pattern. So that way, right now, I'm looking at this potential pullback no longer as a head and shoulder or inverted head and shoulder. Of course, other people will still consider it. They could saying that, hey, no, this is still forming a, inverted right shoulder. So if it get a pivot, but, if that's the case, it probably will end up with a little bit of a false breakout, or not as good of a head and shoulder breakout type of major move. But, who's to say, right? Anything is possible. But for me, I'm not watching it as a head and shoulder or inverted head and shoulder pattern. So right now we're kind of still watching these two levels to see would it come back into the zone. and test this level here, this low. If it's unable to hold this low, then I'd be watching gold to come down to this 1546, 1550 area. Now let's take a look at the the E-mini S&P 500 future. For those that have been following me on Twitter, you've probably seen me post a video, a short video on the E-mini S&P 500 and talk about this possible breakout. Okay? Well, basically was looking at this zone here. I said if it could break above this 4460, then we'd be basically looking at the possibility of the E-mini S&P 500, the ES, to come up to this weekly version point of control here, this POC, this VPOC, somewhere around 45.11 and a quarter here. Okay, so we're basically was watching that for the upside breakout, and for the downside break below this 44.20. Then I was watching saying that look for the the value area low, this weekly value area low here. Okay, for potential target if it break down from this balance area. The reason why I'm watching this area here is that you can see there's quite a balance area with heavy volume. And also in addition, you look at the POC from the prior week and even from yesterday, it's just that this POC moved down today. And we'll talk about that just a minute. The POC was up here. So you can see that this level, this POC is basically the most traded price level. And we call this acceptance, right? So it was, this price level was widely accepted, right? Near this 44.37. And then if we kind of just look at last week and on Monday, we see a heavy concentration of volume here at this area here. So that means that tells us that there are a lot of people is going long here, possibly betting on a breakout on the 44.60 or the upside breakout of this zone. We are looking at the possibility of a liquidation break, and lo and behold, we got the liquidation break yesterday. The other thing is, right, when the value is down here and the price break down yesterday, it broke down here and it started building this volume here. Okay, now we got this high volume concentration now. Okay, the value did not come down, not the POC did not come down until today. So we're going to keep an eye on to see will this POC, the price continue to drop here. Okay, so there's the other thing. The other side of extended long is that we have also too many people going short. So right now we could see that a lot of people is also piling in on the short side, betting on the price to break and come down at this level here. So we could see a short squeeze instead of what we saw here with a liquidation break. So that's another possibility. Also, there's this low volume area that we could see the price come back up near that 44.20 and fill in this void here, right? This low volume area. So it will form a nice Gaussian type of distribution on this auction, this couple week auction here. Now let's see what the market profile is telling us on a possibility for price to come down here. Now here we are looking at the market profile for the E-mini S&P 500. See this 3-day consolidation here. It is forming a little bit of an extended long here, right? So that's why we're also watching like a break above, a break below. See this liquidation break, and right now we are seeing a little bit of getting maybe a little bit extended short here. So we could see a little bit of squeeze back up, or if it continue to work itself down, then there are some of these single print down at this low here. These single print was left behind by on July 20th, and we also have some single print. We did fill majority the single print from yesterday, but we'll take that still need to fill. So I wouldn't be surprised to see come back up to this 40-20 area. So if it continue to move up, then we're basically looking at the POC 44.37 and possibly get back up 44 or high here. Got to, and that's the reason why I'm looking at 44.60. Break above that 460. Then we can see it work itself back up to some of these level and work toward this Globex all-time high, and that would tell us that the S&P 500 will likely put in another new all-time high. So as you can see, putting back those TPO level on this chart here, you can see this these single print right near this close, these lows here. Okay, so if we continue to see it to melt down on the ES, then we can see the single print get filled, then these low will get tested. But if we get a little short squeeze and come up and finish filling this single print from yesterday, then we could see it come up to this 4420 and work itself back up to the point of control and also this poor high here that need to get resolved. Okay, so I hope you find this video informative. Be sure to smash that thumbs up to help me promote and share this video. Thank you for watching and stay safe.